I want to talk about this Bitcoin chart, right? Because we've been focused a lot on volume recently, okay? We've seen it play out on the 1 minute, the 10 minute, right over there, and then on the weekly. So the Bitcoin chart, and I'm actually going to zoom out here. Check this out. Back in 2017, this volume peak marked the highs of Bitcoin, okay? This volume peak here in 2020 marked the lows of Bitcoin, all right? Thank you. So again, I'm just going to show this in case you didn't see. This volume peak right here in 2017 marked the highs of Bitcoin, okay? The volume peak right here marked the lows of 2020. And then if you look back over here, all right, hopefully you can see this volume peak right here at the end of 2022, and again, this was the highest on the Coinbase chart going back 5 years, right, marked the absolute lows. This volume right here, this capitulation, this final volume right there marked the lows of Bitcoin. So we're focused on volume here.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Let's join Gareth in this video about Bitcoin and more.
You basically were looking at Meta, which had 11 green 10-minute bar candles up in a row. And again, I was saying this before, but you see that about 1% of the time or less. It's so rare. It's kind of like the white whale, if you will. And what we saw here is when you got to this candle, look at how you had small, 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 big. That's an indicator it's a blow-off top. Notice the volume confirms it, and the volume is something we've been following more and more, where you have this massive candle of volume, which again is the highest candle on either side of the chart, right? And that again can alert you to a top. Now that alone is not a reason to take a trade. It's an alert though. It essentially makes you very aware. You then got a topping tail on the next 10-minute candle, and what we see is we went from the 10-minute chart to the 1 minute to isolate down our entry. And on this 1 minute candle right here, it was the biggest candle of the entire day on either side, and it coexisted right with that same point here, and that's the trigger. And you say, okay, this is giving us the volume signals, the topping tail, the reversal signals that you need, and ultimately you can see on the 1 minute chart, beautiful play out there to the downside. We ended up taking $2 in profits per share of Meta on the short side. Take a look at these, right? So here's the market with the dominance of the market cap of the trillion-dollar names. We have the NASDAQ 100 is now up 0.94%, so it's a plus 94%, right? And the S&P 500 is up plus 0.35%. And again, folks, why is this happening? Well, simply put, it is simply if you look at these stocks, right? If we look at Apple today, look at Apple ripping higher here, up a monster move here. Look at that move there on Apple. So again, and this is the daily chart on Apple. I got to move my mouse so it actually shows me 1.6% gain on Apple. If we flip to this side and we look at Microsoft today is up 1.42%. We can go to Tesla. Well, Tesla's turned negative, but that's not even a $1 trillion name. Google, Amazon, Meta. Meta's having a big day. We traded that, as you mentioned earlier, but it's having a monster day to the upside. And so I just want people to realize, like, you're going to hear all these headlines, S&P makes new all-time high, NASDAQ makes new all-time high, but just take it with a grain of salt, because what it really means is that the mega caps are making new all-time highs, not the rest of the market.
Bitcoin has dropped 23.4% from its March 2024 peak, marking the longest period without a 25% decline during a bull market. Previous bull markets had multiple corrections before hitting new highs. Bitcoin dropped to $53,550 on July 5 and has since slightly rebounded. 2017 saw 7 corrections, 32% average, and 2021 had 5, 24% average. The 2023 to 2024 cycle saw 3 22% declines. Without major dip, Bitcoin's recent 427-day streak without a major dip surpassed the 2012 record by 63 days. Despite the dip, many see it as a typical correction in a bull market, offering potential buying opportunities. US spot Bitcoin ETFs saw significant inflows of $143.1 million on Friday, marking a recovery after 2 days of outflows, despite Bitcoin prices dropping to $53,550.
I am seeing literally X amount of factors that are telling us that Tesla should pull back today and stall out. And at the time, it was above $250 per share. Now it's come back into about $245 to $246. But when you have this many levels coexisting together, where you have these trend lines, all of these trend lines going through major points here, here, and here, and here, right? And they're all coordinated right where Tesla is at this 250 level. And then when you zoom in, and this is part of the methodology that we teach in the Winning Trader series, when we zoom in, we have 3 different things here, right? And in fact, Dr. B, I'm going to let you, if you want to show that inverse head and shoulder measured move on Tesla, I'll let you show that, all right? Does that work?
Sure.
All right, but here, quickly before, we have what's called a time count, where you have a 7 count of green candles up. 1, 2, 3, 4, 5, 6, and 7. That marks the top right there. You should get a pullback and a 3-bar surge. 1, 2, 3. And these, again, are all signals that exhaustion should be at our doorstep. And sure enough, so far, listen, Tesla's not down much today, but it is stalling out, and it's pulled back off of its highs. And then Dr. B had another factor. Let's show this, Dr. B.
Yeah, check this out. So this is the Tesla daily chart. All right, you had an inverse head and shoulders. Let me zoom in a little bit so it looks a little more clear. Okay, so you've actually got a variety of factors here. You've got the left shoulder, head, right shoulder, downsloping neckline. Here's your move higher. So a couple things, right? So you have a 3-bar surge, 1, 2, 3. You have a gap fill right here. Actually, let me erase this here. You have a 3-bar surge, 1, 2, 3. Gap fill right here, and you have the measured move from this head up to this neckline. If you were to take this line and move it right to here, all right? If you take it right to here, it's the exact measured move, right? So we're getting exhausted on Tesla. And if you go out to the weekly chart, okay, let me go to the weekly chart real quick. Check this out. So if you were to take a Fibonacci level, okay, from this high, right here, this high to this low, take a guess what fib this is, Gareth.
From that high, I would say a 618.
0.5, actually.
0.5, wow.
So, we're right at the 0.5. I think this is where we start to pull back. Now, we may get a little bull trap here, a little pierce higher, and then a pullback. Maybe. But I think we're...
And I think the key is that like, really, when you're looking at this chart between the time count, the 3-bar surge, the measured inverse head and shoulder move, and then also those trend lines, I mean, that's really where a trader becomes elite versus just guessing, right? I mean, It's one thing to just guess anywhere in here and be like, oh, I think it's overbought, let me short, or let me go long because it seems like a momentum play. But it's to have the thesis behind you that puts the odds in your favor, right? And that's really what makes a difference.
Build up all the factors, right?
Right. And it gives you confidence, right? Instead of just, being nervous that you're in a trade, at least you're like, listen, but I have these factors. Let's calm down. I know that these things work historically when you look at the past track records.
Plus, you start small, you inch in, right? You dollar cost average in. You can sit back, relax, and just watch.
Strong Bitcoin ETF inflows and increasing bets on a September rate cut have driven Bitcoin's price upward. Bitcoin rebounded by 6.4% on July 6, reaching $56,975 after hitting a 5-month low the previous day. Bitcoin recovered 6.4%, reaching $56,975 after dropping to a 5-month low. This recovery signals traders' resilience against recent bearish trends from mid-GOX reimbursements and U.S. and German government sell-offs. Analysts, including Kai Yonju of CryptoQuant, emphasized that government BTC sales are only 4% of total market inflows since 2023. Independent analysts suggest this sell-off resembles past events that preceded bull runs. Bitcoin's recovery aligns with a U.S. stock market rally. Disappointing jobs data increased the probability of a rate cut in September, typically bullish for Bitcoin and other risk assets. Bitcoin ETFs saw $143.1 million in inflows on July 5, indicating strong investor confidence. This followed 2 days of outflows earlier in the week. Bitcoin futures funding rates rose to 0.178% per week, while open interest dropped to $28 billion, showing that confident traders are maintaining their positions despite market volatility. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoinzilla for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.